Hi, Pattu from FreeFinCal. After the customs duty for gold was reduced in budget 2024, gold prices fell sharply, and there's been a lot of speculation with regard to sovereign gold bonds. There are many people who say that the move was done to reduce the government's burden on sovereign gold bonds redemptions. Some people say that it will make new gold bond launches attractive because the gold will be it will be available at a lower price, etc., etc., and so on. I have no opinion about all this, and I don't want to speculate, but there are many people now saying, asking us whether they should be buying sovereign gold bonds now. That much I can tell you. We have been saying this for nearly 10 years now. I think sovereign gold bonds are nearly 10 years old now, right? I think we have been saying that for that long, at least, or close to that. Please do not buy sovereign gold bonds if you wish to track the price of gold, if you wish to profit from the gold price movements, or if you wish to so called diversify your portfolio with gold. We have said this in past videos several times. There's no need for anybody to include gold in their portfolio for diversification. Gold is not a hedge for inflation if you actually look at the data. So there's absolutely no need for you to include any kind of gold if your goal is to, for diversification or whatever. If you want to track returns of gold, or if you want to profit from the returns of gold, use a gold fund. If you are a long-term investor, if you are a trader, you always have a gold ETF. But if your future goal is to buy jewelry, then, and if your need is like 8 9 years away, then you can buy a sovereign gold bond. It's a risk free way, excuse me, it's a risk free way to track the price of gold, and then you can buy the jewelry. The same goal, if it is more than 10 years 15 years away, then again you don't need sovereign gold bonds or any form of gold. You can just use fixed income plus equity. So there's no need for sovereign gold bonds at all. It's not a liquid instrument. You can't freely sell, you can't freely buy. Of course, liquidity has improved relatively, but it's not as liquid as a gold fund or a gold ETF. Of course, a gold ETF is not suitable for investors because it's got price now risk. So nothing has changed from that aspect. Please don't buy sovereign gold bonds for the wrong reasons, and then you will have to face these kind of rude shocks.